ARK Innovation Fund is up more than 3% today and nearly 22% over the past 3 months. The fund, though, is still down almost 8% this year. For more, let's bring in Cathie Wood, CEO and Chief Investment Officer of ARK Invest. Cathie, it's great to have you here. And on this election day, very pertinent to have you. We understand, of course, that the performance has kind of lagged, to say the least, down about 68% since Biden has been in office. Are you hoping for a change in the White House?
Well, what's been interesting about this campaign season is both candidates have sounded more and more alike when it comes to innovation. Our focus is only on truly transformative innovation. And so, and it seems to be a bipartisan issue. The best example of that is what happened with crypto this year. We had one party for it, the other seemingly against, and clearly the electorate spoke very loudly. And so they're now sounding very much alike. I think the decreasing regulations is critical, keeping taxes low, critical, and really incentivizing animal spirits is really what we're all about. So I think both sides want innovation. Maybe one is leaning a little bit more towards regulations coming down. That is very important.
Before I move on to the traders, Tesla stock, of course, we talk a lot about. It was higher today, but Elon, a very vocal Trump supporter. If Trump does not end up in the White House again, is that going to be trouble for Tesla at all down the road if Harris takes over the presidency?
I don't think so. Our thesis, short term, anything can happen, and volatility around this important day, we wouldn't be surprised. But if we're right and autonomous, so robotaxis, the robotaxi, autonomous taxi network opportunity is as big as we think it is, any setback would be a great buying opportunity.
Cathie, it's Karen Feinerman. Thanks so much for being on. So one thing different about 4 years ago is interest rates are entirely different. How important is that the Fed keep cutting for your portfolio?
Yeah, it's really interesting that many people equated 0% interest rates with a boom in our strategy. Our strategy in 2017 and 18 had really good years. I think 87% up in 17 as interest rates started up, and then we were up in a down year in 2018. So this correlation to interest rates has been a phenomenon associated with this time. And I think the reason was the shock going from, basically 25 basis points to 5.5% was a real shock to the system and certainly reverberated. Do we need lower interest rates? I think interest rates not continuing to go up unless we're in a very strong innovation-led recovery. Then interest rates, short rates could stay around these levels. We don't think they will. We think we're in a bit of a sinking spell here. And that we'll need a bit of time, maybe some new policies, and then we'll be on our way. So we don't think we need interest rates coming down necessarily. The other thing that has happened over the last 6 years is this concentration in the market, the likes of which we have not seen since the Great Depression. We think that the market is going to start broadening out in the next few years. That should also help our strategy. So the last thing that has happened is our multiple, enterprise value to EBITDA multiple, is as close to a market multiple as I have ever seen in my career. So those three, interest rates, concentration, moving into broadening out, and the valuation of our portfolios, we're feeling really good.
Yeah.